Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Always a pleasure to be on your show.
Hilliard, the Alberta government has just announced a stimulus plan. What is it?
So the headline was $10 billion of stimulus. So in other words, $10 billion deeper into deficit for the year. But about 70 or 80% of it was previously announced in terms of supporting the building of pipelines. Like they took a big position in the Keystone Pipeline, but a big component of it, which is costing about $1.5 billion, is a corporate tax cut. So the corporate tax cut was supposed to decline from I think it was 10% down to 8% over the next 2 or 3 years, and they decided to do it right away. So that's going to cost them, I think it was $1.5 billion that they said, and they're going to put on a major push to try and attract Canadian banks to move their head offices to Calgary.
Why would they move to Calgary when all the big banking business is done in Toronto?
Well, it's pretty far-fetched, I think. I don't think you're going to... I mean, first of all, the tax reduction, so from 10 to 8. So Alberta already has the lowest corporate tax rates in Canada, probably the lowest in North America. I don't know for sure, but for sure in Canada. So if somebody wasn't willing to move to Alberta for the lowest tax rates, another 2% isn't going to make the decision to go change from no to yes. And, but, on the other hand, maybe the Canadian banks are a bad example, but there have been several, large corporations move going back a few years. Trans-Canada Pipeline was one. The National Energy Board was one. They kind of made sense. They were energy related. I think the Pacific Railway moved years and years ago because, 60-70% of their business was in Western Canada. But no, as far as I know, I can't think of any major financial institutions that have left Toronto. The major financial institutions did leave Montreal to go to Toronto. Most of them were in Montreal except for the Toronto Dominion Bank. Bank of Montreal obviously was in Montreal. Royal Bank was in Montreal. But they did move their head office to Ontario after the separatist threat in the 70s in Quebec. But for them to move to Calgary would be a real stretch. Although there's some real advantages. One of the things that I noticed when some of those previous moves happened was you get to offer your older employees a package or to move to Calgary. So what happens, of course, is almost all of the older employees take the package and stay in Toronto. And it's just the younger people that move to Calgary. And so you immediately have sort of a rejuvenation of your workforce just by making the move. It can be, for some companies, it could be very positive. Plus, they're going to save $1 gazillion on space. So in Toronto, it's $50 a square foot for office space. In Calgary, you can negotiate probably, zero. Some really small number anyway. Because there's the equivalent of 3 large office towers empty in Calgary right now. And there's a bunch of other advantages too. There's people can live, 15, 20-minute drive from downtown. There's transit. The executives, if they want to spend $2 or $3 million for a home, which is probably less than they were paying in Toronto, they can literally live within walking distance of downtown Calgary if they want. So, and the mountains are right there, an hour away. So there's a lot of advantages. But when I've brought it up myself with people in Toronto, they just sort of look at you like, what are you talking about? So I don't expect it's going to happen, but Alberta's desperately trying to find ways to diversify the economy. I just don't see a tax cut being that significant as a tool.
Are there other areas where they have a realistic hope of diversifying?
Well, it's hard to, I haven't seen, actually this was the headlines were leaked, and then they said over the next few months they're going to come up with specific programs, but nothing we've seen so far looks really compelling. Actually the idea of getting some major corporation with their head office to Calgary would probably be the biggest stimulus that you could think of. But Calgary's, Calgary and Edmonton to some degree, but especially Calgary is going to be in desperate straits here, or already is in desperate straits going back 5 years when the OPEC collapse happened first in December 2014. And it's not getting better, it's getting worse. So there's really an urgency there. I really don't know what they could do. Go to California and beg Elon Musk to open up a Tesla plant in Calgary. I don't know. I don't know if that would work, but something needs to be done.
Well, maybe Elon would look at it because the Canadian dollar would give him a 25% discount on labor right there, and it's a well-trained labor force. Well,
there's a lot of engineers in Calgary. Now, they took petroleum engineering, not electrical engineering, but an engineer, possible that engineers their skills are somewhat transferable. And when I bought my first Tesla, they was around 2015, so it was a slump in Calgary just when they were laying off all those people. And they don't really have salespeople at Tesla, but the person I was talking to told me that there were a whole bunch of executives in Calgary that would love to buy a Tesla, but they didn't like the idea of buying an all-electric car when they're in the oil and gas business, right? So, and they're just in the middle of laying off a whole bunch of people. The optics were really bad, so but they did actually make a lot of sales in Alberta of Teslas. But I don't think it'll be enough to get Elon Musk to open up a factory. He's talking about Texas, and he's opening in Berlin. He's already opened in China. There will be several more plants, but I don't think it would probably have to be. One of the big ones that hasn't happened yet is somewhere in eastern North America, probably in the U.S. somewhere. There is a plant in Buffalo that is used to make solar panels, but it's not used to make cars. So that's possibly a place, but it would need to be closer to a large population, I think. That's one of the big problems with Alberta. Landlocked and far away from any significant population. There's only 4 million people in Alberta in total. Vancouver isn't huge either, but at least it's right on tidewater, right? So Alberta's got a lot of disadvantages.
Yes, Vancouver's about 3 million people on the water and one of the biggest ocean ports in the world. Exactly.
And closer to the U.S. If you go down into the U.S., of course, you get into Seattle, which is a pretty big place, in less than 5 hours. So it's Alberta is in a tough spot. It really is, and I don't know exactly what's going to happen in terms of diversification. Tourism is good with Banff and Jasper. Agriculture is there, I guess, and but nobody's really hit on the one thing that could really bring it back. But assuming that the oil and gas industry doesn't come back to previous boom levels, which I think is a pretty safe assumption, Alberta's going to be looking for something for sure.
We'll have more with Hilliard Macbeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, the latest Canadian gross domestic product numbers have been released. What do they look like?
It's pretty grim. We had a bad result in March, but April was even worse. Now, one of the problems with these GDP numbers is they take a quarterly number and they annualize it. So what happened in, for instance, the last report, going back to 2019, the last report before the October election came out in about July, I guess it was. And it had a quarterly number for the quarter ending June 30th, I think it was. And it was, the GDP went up 3%. So they multiplied that by 4 and said, these aren't the exact numbers, but it was something outrageous like this. So they said the economy grew at 12%. Well, that's an annual rate based on 3 months, right? So, but it looked really good, and that was the last number going into the federal election, which was nice for the incumbent party, the Liberals, to have that record. Immediately after the election, the numbers came out, and of course it was a much smaller number, and I think it's pretty clear that Canada's been in a recession probably since December of 2019 or January of 2020. Even before COVID hit, we were in recession because of the drop in the energy industry and some other things. So now the numbers are coming out with the COVID-19 impact, and of course they're pretty grim. So the forecast that the government has, one arm of the government has for the full year of 2020 is a 12% drop in GDP, which is, to give you some idea, the worst year since the Second World War. Prior to that was 1982, when all kinds of businesses, I remember it, and all kinds of businesses were going broke. People were losing their homes left and right. Two major Alberta-based banks, or not major, but two Alberta-based banks went broke. And the whole energy industry left Alberta to go to the U.S. because of the National Energy Program. So all of that taken together in 1982 produced about a 4% drop in GDP. So that's at an annual rate, and for 1982. So the number that came out just today, I think it was something like an 18% annual rate. Now, that's ridiculous, of course, because that was the worst part of the COVID impact, and now things are starting to come back a little bit. So they're forecasting a recovery in the third quarter and a recovery in the fourth quarter. But the number for the full year is still something like 10 to 12%. So it'll be 3 to 4 times worse than 1982. And 1982 was really bad. So, I can't even imagine something 3 or 4 times worse, but those are the numbers. And, it's showing up in all kinds of things. Things like, consumer spending, for example, is way down. The rate at which people are going into debt has turned negative. So in other words, people are actually starting to save some money, which is interesting. We're following the lead of the U.S., where the savings rate in the U.S. went up to 33% at an annual rate, starting in March. And now in Canada, the savings rate is up to 20%, which, that seems pretty counterintuitive, given that a whole bunch of people have been laid off from their jobs, and people are not earning the money they were earning if they working in hotels, restaurants, even dentists, and all kinds of people are not able to earn the money. So how does the savings rate go up that much?
Well, it's simple. If you're not going out to bars and restaurants and doing major shopping sprees, you're working from home, you're not buying lunch, you're not buying new shoes, you're not buying new clothes, you're not spending any money on transit. I could see, I save money.
Exactly.
I work from home and I still save money.
The working from home thing, I canceled my, now it's not a huge amount, but it was over $400 a month, the parking stall in the downtown office tower, and I canceled it in March or April. At the time, I thought maybe it was temporary, just a 1-month cancellation, and then I decided just to make it permanent. And, that's $5,000 a year roughly, right? So it's something. And, but the big thing that came out along with this jump in the savings rate is, because there's something I just wanted to mention about the savings rate. they can't directly observe the savings rate. So what they do is they take all of the income that everybody gets, the disposable income, and then they look at the spending, and they take the difference between the income and the spending, and they say, oh, they must have saved that money. That's the savings rate, right? So they don't go to people's savings accounts and look and see, well, how much money did it go up this month? Because well, for one thing, almost nobody has a savings account anymore. But they can observe the spending. So really when they say the savings rate went up to 20 or 30%, what they mean is the consumer spending level plummeted. It just collapsed. And exactly what you said, people have just stopped spending on a whole bunch of things. And now they are spending on a few things like home projects and that, but it's not enough to make up for all the money. So that's where the savings rate jumps in. There's another interesting thing that happened in the data, which is the consumer loan, not mortgages, but, car loans, credit cards, especially credit cards and all that kind of stuff. For the first time probably in 4 decades, maybe 5 or 6 decades, people are actually paying down their loans rather than increasing them. And on the surface, that looks really positive. However, the thought occurred to me, and I don't think anybody has studied this yet, so this is just a thought. If your mortgage is on deferral, and something like as many as 20% of all people with mortgages have asked for a deferral on their mortgage, which lasts till September, you could take that money you're not paying on your mortgage and use it to pay down your credit cards. And I wonder if that's what's happening to make that look. But we've never seen people paying back their credit like this ever before. I don't think it's ever happened. But it certainly hasn't happened since the 1960s when they started keeping records. So it'll have a big impact on the economy because, as you and I have talked before, the change in the amount of debt, which one professor, Steve Keen, calls it credit, that positive number is a huge component of the demand that goes into the economy. So if people stop increasing the amount of debt they have, in other words, if the credit turns negative, the economy is going to have a really tough time with that because the economy depends on that consumer. It's about 70%. In North America, it's about 70% of the GDP is consumer spending. And consumer spending depends on people taking out new debt in the form of new car loans, new credit cards, new mortgages, all of the above. So if people stop doing that, even if they slow down the rate at which they go deeper into debt, it'll have an impact on the economy.
We'll have more with Hilliard Macbeth right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, you've pointed out something pretty interesting when they talk about real estate and the value of it and so on. One thing that isn't included in the valuation and the worth of it hasn't been included in stats. Can you tell us about that?
Yeah, so the one of the biggest components of GDP, since we were just talking about GDP, is what they call residential investment spending. So residential investment spending has been 7% or higher for the last 10 years. So just to give you a background there, the peak in the U.S. was 7% of GDP. It only lasted for 1 year. Then it dropped all the way down to 2% of GDP, and now it's back up to about 3.5%. So you see headlines in the U.S. that house spending on houses bounces back or something. Well, they're bouncing back from 2 to 3%. Well, Canada's been at 7 or 8% for longer than a decade. So what goes into that residential investment spending out is not, just to be clear, it's not buying and selling already existing houses. That is not included in the GDP. It's not included in this number. the three main components of the residential investment spending, 8% of GDP, it's a huge number, 8% of GDP, is about half is renovation spending, and a little bit less than half is new home construction. And then for some reason, the cost of buying and selling, as in commissions for realtors and that sort of thing, is included in GDP as well. And so when you add all that up, you get to about 8%. So let's say about 4% of GDP, about half, has been renovation spending. So what I noticed recently, and in my book, I didn't put this in because I wasn't sure about this, but I got some additional information recently, and I'm still trying to research and nail it down for sure. But what appears to be happening is when somebody buys a teardown house in downtown Edmonton or Vancouver or Toronto, they might say, like Edmonton, I know the numbers, let's take Edmonton, mature neighborhood, close to downtown, good high quality area, might cost $500,000 to buy that house, which is a teardown. So it's basically just the lot. Then somebody decides that they should spend $1 million to build a beautiful new home, 3,000 square foot home at $350 a foot is $1 million. So that's $1 million. So now they spend $1.5 million, and then they sell it. So maybe they do it on spec. And of course, I'm talking about history now because it's pretty hard to do it now, but there was a time when people were doing that regularly. So in the sale, the buying and selling records of that home, it was bought at $500,000 and it was sold at $1.5 million. The price tripled. However, nobody checks to see, and it would be difficult to do this. So I understand why they can't. But still, it's misleading to suggest that it went from $500,000 to $1.5 million. It was really the residential investment spending that pushed it from 500 to $1.5 million, not a general increase in the price of housing. So the price of housing basically is the same as it was before. It's just that somebody spent a pile of money to build a brand new home. And I think, I'm pretty sure, although I have to check a little bit further, I think that's had a pretty big influence on the real estate indices for the last few years, because checking with the people that calculate these things, it appears that they're not able to track how much money has been spent. Now, in certain times, it's a very tiny number, so it doesn't really matter. But the last 10 years has been such a big number, such a big percentage of GDP, that we are probably getting a misleading indicator to suggest that house prices have gone up that much, when a lot of it's been our own money that we put into spending into upgrading. I mean, you could call it the granite countertop indicator. Everybody needs, and I took an extreme example, but there's lots of situations where people spend 20, 30, 50, 100,000 on a kitchen renovation, granite countertops and all that sort of stuff. And that, for sure, that doesn't get recorded into the level of the price of housing.
Canada is included in the list of nations allowed to fly into Europe when they open their countries up to airline travel again in July. The U.S. is not. What is this telling us about the reopening of the world economy?
Well, a lot of people are saying that Canada's done a much better job of handling COVID-19 than the U.S., and this is a confirmation, I guess, from the Europeans, who they had a mixed result early on. Italy, and especially Italy, and some other parts of Europe had a very poor situation, but they've now improved a lot. Germany, the biggest member of the European Union, was always in pretty good shape. So they've done an assessment. I don't know if politics comes into it, if they want to send a message to the U.S. that they don't like them or something. That's quite possible, because the U.S. has threatened to put tariffs on European goods, and Canada is viewed as friendlier. But I'm sure that the U.S. won't like it. And also, I don't think that it's necessarily the final word on COVID-19. They said that they were going to review these rules every 2 weeks. So if we get an outbreak of COVID in one of the major cities in Canada, they could easily change their minds 2 weeks from now. And it certainly looks on COVID-19 like that's what we're going to live with. There is an expert called Laurie Garrett who's written 3 or 4 books on viruses and epidemics. And I saw an interview early on in this, probably back in March. I saw an interview with her on TV, and she said that this thing is going to come in waves, and it's going to last probably 36 months. And she said that's my most optimistic scenario, 36 months. So that's at the one end of the spectrum, and the other end of the spectrum was somebody in a leadership position, elected person, saying it's going to fade away by the summer. so somewhere in between maybe is the reality. But if it comes in waves, then just because somebody's had a good result up till now doesn't necessarily mean that they're going to have always have a good result. And of course, we didn't necessarily have a good result. Montreal had a very bad result, and Calgary had some major outbreaks as well. So I think the idea that it's going to come in waves is probably likely to be correct. And that means that even if we're approved for travel this week, 3 weeks from now, we might be canceled.
Well, it might be a good idea to avoid travel to meatpacking plants.
Yeah. Well, there was something, I think it was probably on Twitter, and it said, are you planning to travel on an airplane in the next month or something like that? And so I thought about it, because they were asking, you can do these little polls on Twitter, and I thought, really, why? Why would I try? I'd have to it would really have to be a necessary trip to get on that plane with all those other people in a confined space, and because even if they say you have to wear a mask to go on the plane, which they're not actually saying, but even if they said that, once the seatbelt light comes, gets extinguished, people take their masks off. What are they going to do? Go around and arrest them for not wearing a mask? It just doesn't seem like it's a very good situation. So I think I'm going to pass on it. I think what we're seeing already in Alberta in the summer, and sure in BC as well, is a huge increase in automobile travel. And the highway yesterday, a friend of mine went to Red Deer and back and said the highway was just packed with vehicles, not just vacationers, but also trucks and everything. But it seems like because without the passenger, this is a little known fact, without the passenger traffic, passenger flights on the airlines, the cargo has to go on the road or the train. A lot of that's why they're so sticky on the baggage on planes, is because they want to use the space to ship Perlator and FedEx packages on that airplane. And so if the flights aren't going, then FedEx and Perlator and all the Canada Post, all these people have to find another place to put those packages. So the highways are going to be full with trucks and cars and everything, as everybody, because people want to get out and they want to go. I mean, everybody in Alberta wants to go to BC. I don't know where people in BC don't go to Alberta. I know that, but maybe the people in BC just go to another part of BC.
Well, they're encouraging British Columbians to holiday in British Columbia and observe, the same social distancing that they have for the last 3 months.
Yeah, and I think BC's got an excellent record, and so it'll be an interesting experiment to see how, when all these vacationers come and want to go to their favorite camping site and their place in the Shuswap Lakes, and not to pick on the Shuswap Lakes, but that's a favorite place for Albertans to go and get on a houseboat and have a party. We'll be interested to see if anything changes. I think outdoors it should be possible to socially distance much easier than say in a restaurant or a bar.
Yeah, and there's been little virus transmission outside.
Yeah, as far as anybody, apart from, you saw those pictures of people at big rallies and stuff, but they're jammed in pretty closely together. So I think if you can be out in the outdoors, we went to Jasper a couple of weeks ago, and we didn't realize it. We got there late at night, and then we went in the morning. We went for a 3-hour hike through the forest around Jasper Park Lodge, and we got back to the lodge, and they said, "Oh, there's 30 grizzly bears in the Jasper town area." Because what happened was, it was a bad spring. All the snow was up high, so the grizzly bears come down, and then they discovered there's no people, so they just moved in, and they sort of taken over. So the golf course, which I went to the next day, had all these people around to chase the grizzly bears away, so the golfers won't get eaten by the grizzlies. So we just got chills down our spine thinking that we walked for 3 hours through we didn't see any grizzlies. So we saw lots of elk, and the elk are really nervous because of all the grizzlies around. They're really terrified about their babies. So the elk were really skittish, but luckily we didn't meet any grizzlies that time.
Well, perhaps you protected yourselves by being very noisy.
Yeah, that's probably what it was. We were discussing the future of the COVID-19 and.
Yeah, because I spent a lot of my teenage years in the Rockies, and I never worried about being attacked by a bear for a second. I never even thought about it. Maybe positive thoughts are what you need.
Well, we used to go up there every summer and for 2 or 3 weeks, and there were people killed over the 30 years that I went, and one of the worst things is I remember this instance. A guy was riding his bike, and he came over a hill, and a grizzly was right there, and he crashed on his bike, and the grizzly was so startled. If you startle them, then that's not good. They don't like.
So as long as you don't surprise it or get between a mama and a baby bear, you should be okay.
Yeah, and that's the thing. If you're on a bike, you're moving too fast. So if you're walking, the bear's got a chance to detect you from noise or smell or whatever.
Yeah.
And they're going to probably just move away. So. But if there's 30 grizzlies in the Jasper area, I would be careful. I would be very careful.
Those are only the ones they know about, of course.
Yeah, I mean, the normal number would probably be 3 or 4, at the most. So 30 that's a crazy number. And I'm sure maybe they'll go back into the hills as more and more tourists arrive. Or maybe they'll just eat the tourists and, that'll be it. But hopefully not.
Hilliard, thank you so much for chatting with us.
Nice talking to you, Jim.
My guest has been Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. Find him on Twitter at HMACB. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.